What's going on, guys? It's your girl, Megan Savage. And if you're new here, hey, what's going on? I am so glad you found this. This is volume 2 of my quick start trading mini series. If you haven't seen volume 1, I will attach the link down below. Please go watch that first if you are a complete newbie. It has all the basics that you need to know in order to actually start your trading journey. But if you have been through volume 1 or you understand the basics, like you know what a pip is, you know how to read a chart, you know how to manage your risk, but maybe the markets still feel a little bit unpredictable to you, this is where you want to be. And in case you didn't know, if you have any other trading questions, feel free to either reach out to me directly on my socials, which are also going to be attached in the description, especially if you want to join my personal Telegram channel. I drop some education behind the scenes giveaways in there and ways that you can contact me directly. You can leave your questions in the comments as well. But today we're going to be talking about why price actually moves. And trust me when I say this is usually the piece that most people are missing when they're first getting started. So let's get right into it. Okay, so at its most basic level, price moves because there's buyers and sellers. If there's more buyers than sellers, price goes up. If there's more sellers than buyers, price goes down. You probably already knew that. Here's what causes a mass influx of buyers and sellers at the exact same time. Information. This is when news enters the markets. This information is important because it changes how people feel about something's value, and everyone reacts at once. Millions of traders and institutions are all making decisions simultaneously, and that's what caused these big explosive moves that look like Drake candles, if you know what I'm saying. But no, your broker did not personally go into your account and take your money. Jerome Powell did, but we'll get back to that in a second. So where does this information actually come from? It comes from something called the economic calendar. It's a timetable of every single economic event or announcement that's coming out. Some of these drop weekly, some of them drop monthly, every few months. And institutions around the world have this calendar memorized. They plan around it, they have positions around it, they are ready. Because if you're sitting in a trade and you didn't know that something was dropping on the news, it really doesn't matter how clean or A+ your setup was. The news will override it most times. So let me walk you through the big ones. First, we have NFP. This is non-farm payroll. It's the first Friday of every month. This tells you how many jobs were added or lost in the US economy every month. Strong job numbers means a stronger economy, which usually means a stronger dollar. Weak numbers, well, means the opposite. When NFP drops, the markets can move hundreds of pips. And I'm talking about in seconds. I have watched this happen before live and have lost a lot of money. Then we have CPI. This is the Consumer Price Index. This is inflation data. How much is everyday things costing versus last month, last year? This one is huge because central banks use this information to make decisions on interest rates. And as you know, interest rates move everything. And we'll get into that. We also have GDP. This is gross domestic product. This is the overall report card of the entire economy. Think of it like how much is your country producing? A strong GDP, a strong economy. A weak GDP, well, not so much. Now let's talk about interest rate decisions. Now, like I said before, these come from central banks, and these are hands down the most market-moving announcements that you'll ever encounter. Now, all of these are in the economic calendar. And the best part is the calendar is completely free. The one I use and I recommend is forexfactory.com. Honestly, I'd bookmark it right now. It shows you every upcoming event, which currency it affects, and how high impact it was versus what they thought the market was going to do and what it actually did. Let me explain central banks in a way that actually makes sense. Every major country has one. In the US, we have the Federal Reserve, aka the Fed. In the UK, we have the Bank of England. In Europe, we have the European Central Bank. And in Canada, we have the Bank of Canada. These are basically the people that are in charge of making sure their economy is stable. And one of their most powerful tools is interest rate. The interest rate is the cost of borrowing money. It's simple as that. When the Fed rises rates, borrowing becomes more expensive. Banks and investors can earn more just by holding the US dollar, which then in turn makes the demand for the dollar go up. The more demand means the dollar gets stronger. And when the dollar gets stronger, pairs like Euro USD goes down because Euro becomes relatively cheaper. Here's why this matters to you practically. The Fed's meet relatively every 6 to 8 weeks to have a meeting. And then they make announcements that move the entire market. I have personally seen NAS move over 1,000 points on a Fed day. Gold, oil, currencies, indexes, all moving at the same time. So if you do not know what announcement is coming out and you are sitting in a trade, I do not care how perfect your setup was. You may start gambling or you might start feeling like you did something wrong. But this is an easy fix. You just need to know your calendar. Okay, so there's another thing we have to talk about because I've seen it in multiple trading communities and it sort of makes me laugh. But it also breaks my heart a little bit because I do know how frustrating it can be. I saw someone say this before, that my broker is manipulating my trades. And even though it's extremely important to pick a broker that you trust, I say this with love, it probably isn't your broker. Go check the economic calendar. Make sure that it wasn't the news. And please understand, I'm not saying every broker is perfect. There are bad actors in the industry. I've talked about this many times before, but I've seen a lot of beginner traders blame their broker, blame their strategy, blame everything under the sun, but just not realize that they have to just check news. So definitely make it part of your habit before you clock on to the charts. So let me give you a practical version of how I actually use it. First, you're going to open Forex Factory. You are going to see a bunch of upcoming events. Each one of them has a colored icon: red, orange, and yellow. Red is high impact news. Orange is medium, and yellow is low. As a beginner, I would focus on the red ones. Those are the ones that can make price look absolutely insane. And any of my beginner traders, I tell them, do not trade on a red folder day. But most importantly, you need to see what currencies are actually affected by that news. You also want to know what time it drops and the two numbers, which is the forecast and the actual. The forecast is what is the market's expecting, and the actual is what actually comes out. When those two numbers are different from one another, that's when you see the big moves in the market. The market really hates surprises. You may hear people say differently, but what I teach my students and myself is I will not enter a new trade 5 minutes before news. If I'm already in a trade from before, I may leave it in if my stop loss is placed correctly and I am very sure of it, but there's no way that I'm re-entering a new trade that close to it. That is not trading. That is hopping into the markets and hoping for the best. Like I said, there's other people that have a different strategy that they trade with news. Not saying it's wrong, definitely not my style. And for this video, my goal is to just teach you guys how to use these events properly and plan to actually make trades around them. So let's bring it all home for you. Price moves around information. The biggest source of information in the financial markets are economic news events: job data, inflation, GDP, and most importantly, interest data from central banks. The economic calendar drops this completely free, and checking it is not optional. It is part of being a professional trader. This is the beginning of volume 2 of my quick start mini series, and I am very excited because we're going to be going much deeper than we did in volume 1. The next video, we're going to be going over the difference between Forex, futures, and stocks. This will help you guys understand the difference and know which market is built for you. If you got any value from this video, hit like and subscribe, and don't forget to turn on your notification button for the next video that's coming out next week. And for those of you who didn't listen to me earlier, I will drop the forexfactory.com link in the description so you guys have it. Remember, you're savage, not average, and I'll see you guys on the next video.